All right, it's 8:01. Thank you for joining us. We will start on time. We will start now. And first of all, I'd like to say thank you again to everybody who's online for signing up and for joining me this evening. My name is Umar Munshi. I'm the founder, co-founder of Ethis Group, which is a group of companies and platforms mainly focused on Southeast Asia. And over the course of the next 1 hour, I will be answering questions. There are 10 questions and maybe 1 or 2 bonus questions. And of course, we hope to have more questions from you online. So do keep this interactive. I will be speaking basically, and I do hope to have your response and your input through the chat function in the Zoom app. Right, so all you need to do is just to type in your question or type in your comment or type in anything you want at any point in time. I will address your questions and your comments right at the end, but don't wait till the end to give your questions. As we go and as I answer the questions that have been asked by other community members, if you're triggered to ask any question or to make any comment, please do so that you won't forget, and so that I can address it right at the end before we finish today's session. All right. So moving on, it's 8:05. More people. It's 8:03 actually. More people are starting to join in. Typically, it takes about 10 minutes for everyone to come in. And in any case, we need to be on time. So I will focus on Ethis a little bit for about 5 minutes before I jump into the questions. All right. Now, Ethis is a combination of 2 words, ethical and Islamic. What we do is first and foremost ethical. We try our best to internalize ethics in everything that we do, from the offerings that we have on our platform for you to invest in or donate in or contribute to, and also internally in our team, our people, as well as our procedures and our culture, right? So Ethis is ethical. That's what we strive to be. And underlying everything, the foundation of our ethics, the foundation of the business that we have is based on Islamic principles, Islamic finance principles, right? So of course, Ethis is meant for everyone. It's meant for humanity. It's meant for anybody and everybody who likes what we do, who are looking for returns, who are looking for people who are looking for social impact, people who are looking for transparency, and those who are looking at making impact investments or emerging market investments. Those are, just a quick summary of some of the reasons or some of the interests that our community has. Now, Ethis, just a little bit of history. We started quite a long time ago. We started in 2014 in Singapore. I'm Singaporean. I was born and bred in Singapore, but now I'm living in Kuala Lumpur. And this webinar is from my home in Kuala Lumpur. But yeah, Singapore is my country, and I started Ethis in late 2015. And at that time, it was called Club Ethis, which was a private investment club for Islamic investors in Singapore. And we were investing mainly in Indonesia, although we did have a few good small projects in Singapore initially. And when we started at that time, crowdfunding was not yet known. Crowdfunding was not yet regulated. And so we called ourselves an online investment club. Pretty soon, regulators started getting involved. And then we pivoted in terms of our branding and our focus. We became Ethis Crowd. Some of you may be familiar with that name. This was in 2016. And we started focusing on social housing development projects, right, to provide funds to developers for medium-term project financing of property developments in Indonesia. And from there, we grew organically. All the while, we are operating with the knowledge of the regulators, but without a formal license. Because what we did was not something that the regulators had licensed yet at that time. Fast forward a few years later, last year was a great year for us. It was a year where we obtained 2 licenses, one in Indonesia, which is called a peer-to-peer financing approval by the Financial Services Authority of Indonesia. Acronym is OJK, or OJK. OJK has given us this license late last year, based on our activities and based on the activities that we want to do moving forward, which I'll touch more about in a short while. And in Malaysia, we have a very interesting license as well from the Securities Commission of Malaysia. And that platform is yet to launch. It may take 1, 2, or maximum 3 months before we can go live. We are still in the process of getting all our procedures and all our rules to be approved and the go live approval to be obtained from the regulators, but we've already received the license. We're just waiting for the go live. So right now we have Indonesia already operating, and Indonesia has been for the past 4 years or even 5 years, our main market. 95% probably or even more of the funds that have come from our crowd, from our community, from people like you, has gone straight to Indonesia. And that was all before we were licensed. Now that we have licenses, we're looking to scale up rapidly. And we've also started to secure partnerships and support from various stakeholders in Indonesia. Right? I won't touch much about Malaysia today. When the time comes for us to launch, you'll definitely be informed about it. And at that point in time, I'll be also arranging to have another webinar and a lot of material to share what we're doing in Malaysia. So on to Indonesia, what we have been focused on, and our strength, our track record, what people know us for, is for providing bridging funds from the crowd, from you, to help you invest in projects by property developers in Indonesia, specifically for low-income housing or low-cost housing. And these are households that are typically in the lower middle income of Indonesia, where one household, maybe sometimes one person, sometimes two people, sometimes even three people are earning income, right? The most common would be two people earning income, and their household income is probably from the range of about 250, 300 US dollars, all the way to 450 or 500 US dollars, right? So these people have income, they are stable in the sense that they have a job that pays them every month and the job is very stable, typically working in agriculture or in factories. But what they have is just enough for them, for their livelihoods, for their children. And it's difficult for them to break out of that bare minimum kind of life. And the difference that we bring to them is initially, or the status quo for most of these, the people in this segment in Indonesia, they're not able to buy homes. And so they have to rent. Typically, they'll rent rooms. There are not enough houses. There's a huge shortage of about 13 million houses. So they will rent rooms, and that's unhygienic. That's not sanitary. That's not comfortable. It's not healthy as well for the dynamics of the family. And there's a lot of instability because they're at the mercy of the landlord. So there are also sometimes social issues and other problems. So that is not a good situation to be in. And it's difficult for the family to improve their lives or look forward to a better future. What we do with our social housing projects, when you invest in these projects, you actually help the developers to build more houses faster. And these houses will then be owned by these low-income families. Typically, they pay the same or lesser than what they would if they were renting a room, and they own an asset. They own an asset, they have stability, and they have usually at least 2 rooms. So it helps in their family's life, and it gives them a lot of confidence and a lot of impetus for them to have a better life, right? So what we've done over the past few years is we've facilitated more than 1,000 investments from about 60 countries to invest in Indonesia. And Indonesia will continue, especially the social housing sector, will continue to be our main focus for Ethis, given the good track record and the good experience that we have. All right. So there was more than 5 minutes, it's about 10 minutes. I'll jump now to the very first question. Now, the questions are a little bit random in the sense that it comes from various different people who want to know different things, right? So as I move on, I will also expand on the questions to reflect to give you more understanding, because what we want is to be as transparent as possible so that you make an informed decision when you decide to invest in the projects. You do so with your eyes wide open and with understanding what's happening. Now, the first question is the platform secure? Now, at this, the answer first and foremost is yes, right? The platform is secure. Our technology is secure. If you go to the website, you will see it in your address bar or in your navigation bar. There'll be a small padlock there, typically for most browsers. So that shows that we are secure, right? And the data and our server, it's all secure. Now, this question, I believe, is more related to the transaction that you're thinking of making, right? So what happens today, or what's happening today, is that your investment will go from your bank account, whichever country you may be in, directly to Indonesia, meaning a bank-to-bank transfer, or through an online remittance company, right? The biggest one globally is called TransferWise, but it doesn't serve all countries. In Southeast Asia, there's Transwap. Essentially, you are making a transfer from you directly to the Indonesian bank account. So the money does not actually go through the platform like it would for e-commerce. When you make a payment online to buy something, you use your card and you make the payment, right? For Ethis, we are not able to do that. At this point, the cost is too high, and the technology that is currently able to bring all currencies and from all countries or from many countries to Indonesia is just not yet available. So what we are doing is we are building new technology that we hope will make the process more seamless. So right now, essentially, when you make your decision to invest, you essentially submit your interest to us, you submit your pledge to us, your data goes to us directly, the contracts are done automatically, you are given instructions on where to send your money to, and after you send your money, all the information will be captured in the smart contract, and you will receive it in your email, right? So that's question one. Let's move on to question two. How do you manage post-investment risk for your investors? All right, interesting question, right? So now let's imagine you've already made your first investment, or maybe your third or fourth investment, right? A lot of our investors prefer to spread their investment over 2-3 projects. So you have already made your investment or made another investment, and the project is now running. Okay, first of all, we have differences in our projects, although it tends to fall into a few types of projects. And the most common one that I will highlight is called Ethis, where it is essentially construction financing. So what happens is that the crowd will invest to purchase units that are under construction or about to be constructed. And this payment for these units will go to Indonesia into a holding account. And that holding account will then transfer in phases or in batches, typically 2 or 3 times based on agreed milestones to the developer, right? So let's say we have $1 million from the crowd to buy 100 units or 150 units that are being constructed, yeah? And this money will go out to the developer in phases based on their progress. It doesn't go out all at one time. Now, that is the first risk mitigation where the money is disbursed to the developers based on performance, right? It is riskier if the entire amount is given upfront, because then there may be avenue, or there may be sometimes money in the project gets intermingled with different activities because the project is running and there are many things happening. So the developer needs to manage his cash flow, and thus it is better to only give what is required to hit the milestones and keep the remainder in the holding account, right? So that helps in 2 ways. Firstly, like I said, it controls the outflow of money disbursement to the developer so that he only has available what he needs. Based on agreement, he gets more. Secondly, if something were to happen or to go wrong or to be delayed, then the developer has to fix that problem before the next disbursement comes out, right? And in the very worst case scenario where it is obvious the developer is not able to perform, or in instances where there's a degree of poor conduct, right, or breach by the developer, meaning maybe he misallocated some funds or he did something that's outside of the agreement, then at least there's still funds inside the holding account, yeah, and that funds can be used at a later stage to continue the construction of units, and the money is still there to continue the construction of units after we solve the problem, or in extreme cases after the assets are taken over and the developer is replaced, right? So I'll touch more about this later on, but at the end of the day, that is the in terms of the cash flow, this is very, very important. That's one thing I want to highlight. Now, secondly, the last example or the last scenario that I just shared, where there is an extreme case where the developer is found to be not performing, or more extreme than that, to be breaching the contract or breaching the agreement, then what happens? What's the worst case scenario? Now, in property and in any investment, basically, you need to know the worst case scenario before you part with your money. Before you contribute your capital, you must know what is the worst that can happen, right? Now, when you invest in any real world business, whether it's a startup or whether it is a giant listed entity, you buy stocks and shares, now you can lose part or all of your capital, all right? Now, the difference is with property, there is an asset, right? There are fixed assets or collateral that is pledged to the project, and that is what we do as well. Our project owners, the developers, pledge a collateral, pledge the units, pledge assets to the crowd. So if something does go wrong, at least we know we have the asset. And then what happens is there'll be a process and a period of time that's required to recover those assets and dispose of it or sell it. Or if there's enough money, like I mentioned earlier, in the account, in the holding account, and it makes more sense to develop or construct and complete the project as opposed to trying to sell a semi-completed unit, then that can be done as well. All right. So these are two things. And the third thing is we have our team on the ground in Jakarta, and our team in Indonesia will go and do project management, tracking service every month to every project. Most of the time physically, at the very least, we will also, if the project is too far away, then we will go every 2 or 3 months. Yeah, but every month we will collect data and reports, and we will have surprise visits to ensure that whatever information the developers are providing to you, the investor, is accurate and verified. And that's our role, to be checking and to be ensuring and to be assisting and facilitating, right? The developer's responsibility is to follow the contract and to do his job and to do his part. And we are there to track and measure and to pressure to make sure that this happens the way it should, all right? So those are a few points that I can share for in terms of risk mitigation. And question 3, I actually already touched on question 3 and question 2. So I'll just recap. The main risk of any investment, whether it's our housing projects, Indonesia, Malaysia, or elsewhere, or any other kind of alternative investment or investment in a company, not saving money in the bank, not those kind of guaranteed schemes which give you low returns. When you are investing, then you need to know that there's risk of loss of capital, right? Now, for property, as I mentioned earlier, I will summarize. We have collateral, and the collateral can be disposed of, or we can continue the project if we need to, if we have the means to do so, if there's sufficient cash after we revive the project, or after we try and recover from whatever problem there may be. So that is the worst case scenario. In property, typically you don't lose your capital, right? It's a matter of how fast you can get your capital back if something goes wrong. Now, more common and more typical of the projects on our platform, based on our history, based on our experience, is delays. As a property investor, you must have holding power, meaning you put money that you're not dependent on. You're not putting money that has a timeline, right? You're putting money that is extra money in your bank or excess cash that you do not require at this moment in time and in the next few years at least. All right. So what we try to do as a platform is we receive information from the developer. The developer tells us in our estimation, and based on the business plans and everything they give to us, they believe they can do it, for example, in 11 months. Okay, so typically we will look at it, and based on we've gone through about 50 different campaigns. Based on our experience, we'll see whether it makes sense, and we will ask questions to the developer if any part we feel is lacking or is not sufficiently strong in terms of the justification, and then sometimes they do some revisions, right? But at the end of the day, is the developer representing to you, the investor, that they can do it in 11 months, right? So what we do is we discuss with the investor, with the developer, and typically we add a buffer. We advise them, be conservative, add a buffer of 2 or 3 months. That's why you see most of our projects, there's a 2 or 3 months range, right? Because it's a project, it's not a loan. You're financing a project, you get your money back when the project completes. It is not lending money and getting it back at a fixed point in time, right? Now, we also have a risk statement in all our campaigns. You can go to the campaign page and you will read a tab under the risk tab. And it's stated there that all property projects can delay additionally from 2 months to maybe even 12 months, right? So as I mentioned just now, the good thing about property is you have assets, so you're not going to lose your money. But the thing that you need to consider is that in property projects, even the best developers, even the biggest developers in any country, there can and eventually there will be a delay somewhere if you invest in many, many projects, right? So that's why we always advise our investors to spread out your investment in 2 or 3 projects, right? Unless there's one in particular that you really like, or there's a developer that you have been following and you really believe that this developer is good, you've gotten profits from him before, you want to invest again, then of course that's entirely up to you. So those are the 2 main risks. The risk of default. In that case, we will need to revive and recover whatever collateral and asset, and the risk of delay. Delay can happen for many, many, many different reasons. And this range from bad weather to issues with manpower and supply to issues in processing payments. All these things are all different factors that can happen. But what we have done is, based on our years of experience and the about 50 different campaigns that we have done, we come in most of the time at the stage where there's lower risk, yeah, where we know that there's already a permit or there's a high chance to get a permit for construction. And most importantly, 2 factors that we always look for is, one is the support of the financing bank that's giving the mortgage. That's very important. The mortgage or the Islamic financing from the bank to the home buyer is what gives us the sale or the revenue, right? And that's where we get our payout for all of you. And the second thing is, there's a good and strong base of buyers, or even a captive market of buyers, and sometimes even a lot of pre-bookings already done, right? So these are some of the risks, and these are some of the risk mitigation that we do. Number 4 is very interesting. Global recession. And nowadays we hear and we see more and more articles about recession. And it seems that, there's a lot of instability in the world today. So for Ethis, specifically for social housing in Indonesia, I would say that it is not much impacted by global recessions, right? I'll be lying if I say it's not affected at all. Yeah, global recession affects everyone in every country, but to various degrees or to different degrees. Okay, let's take a step back. Indonesia itself as a country has never gone into any recession since the Asian financial crisis or the ASEAN financial crisis, 1998. So it's been a long time since Indonesia had any recession. Even though the world went into 3 or 4 recessions in that period, Indonesia did experience slower growth, but it was still positive growth. All right, so check it out online, do a bit of research if you like. We have that information also in our campaign fact sheet. Indonesia is one of the most stable emerging countries in the world, right? Even its politics, usually in developing countries, you have political challenges, instability. In Indonesia, it is very, very stable and very, very solid. And thus, our approach is, when we go for Indonesia, it is because it is less prone to what is called external shocks from global recessions, right? It is affected, but less so than most countries. Secondly, social housing. This is a segment that provides houses based on real need and real demand, and there's a huge shortage. So whether the economy is good or slow in Indonesia, there's going to be a high demand for this range of housing. All right. Now, another component to consider is, are banks willing to finance people at that segment when there's a recession? Well, in Indonesia, it's part of a government program. And as long as the government allocation has been done at the start of the year, there is going to be support for the bank, and the bank has a quota to meet. So funds will go out, right? Maybe in the time of a recession, there can be some delays where banks tighten up or something like that. That may happen, all right? So I believe I've answered this question. And moving forward, we are looking for other types of projects so that you have more variety. But at this point, and continuing from now, we will definitely continue to focus on social housing, because we have found that it is a very good, lucrative with sector with healthy profits, and most importantly, low risk in terms of market risk and in terms of buyer risk. Number 5, as one of the best Islamic finance companies, what is your view on Wakaf? How is the movement and practice in the world right now, and what is the best practice to revive it? All right, so this question and the next one, I think, is also about Wakaf. Suddenly there's some number of questions on Wakaf. Now, first of all, I wouldn't say we're one of the best. We are one of the best Islamic finance companies. There are thousands of Islamic finance companies. Maybe in terms of fintech, we do have a good reputation. Yeah. But yeah, let's focus on the question, which is about Wakaf. For those who are not aware or who may not be familiar, Wakaf is a form of, it's like an endowment or Islamic endowment. Essentially, Muslims give their assets or even in the form of cash to the use of the community, or for good purpose to the community, all right, or to a specific use. Sometimes, for example, you want to wakaf land for it to become a mosque or hospital or school, right? Sometimes people give wakaf for their family members, right? So it's essentially like the modern day concept of endowment, which was actually inspired by or based on wakaf, right? Wakaf came long time ago in Islam, and today there are countries which have huge amounts of wakaf assets, and the questions here relate to how do we revive wakaf, right? Now, Singapore is a very good wakaf system, although, I mean, nothing is perfect, but you can take a look in Singapore, warees.sg, waris.sg. It's under the religious authority in Singapore. Now, my view is there are two ways that we can leverage on wakaf, and crowdfunding can definitely be an avenue to do so. One is to raise funds to construct or to develop assets or buildings and structures on wakaf land. There's a lot of wakaf land that has been endowed a long time ago by individuals in the past, right, when they passed away. And that land, a lot of that land is dormant, right? And it's sometimes difficult to invest in that land or to get financing for that land for various reasons, from legal to culture. Now, with crowdfunding, we can potentially raise funds from the crowd to invest and develop assets on wakaf land, and a component can be provided to give returns of capital and profit to the investors. All right. Most important thing is that the wakaf asset itself cannot be sold. It cannot be lost because it's already given for the specific religious or social purpose. Yeah, but the asset that's built on top of it can give returns to whoever invested in that asset. Right, so that's one way of doing it. Another way is cash wakaf, where people contribute or individuals contribute cash as an endowment, and that endowment is then managed by a trustee and or a company or a project owner, and that money can then go out to finance projects or to invest in projects, and it's supposed to come back again after that, back to the wakaf, and then it can go out again. So basically, it's a revolving fund. It's a permanent fund that keeps going in and out into projects to support projects. And if it's a pure wakaf in terms of the intention. If there's no investment component, then the wakaf can either give out financing for free without taking any profit, or it can have a profit component and grow over time, right? So this is what I think is best because, or very interesting, because for cash wakaf, you can utilize it for many different purposes. For land wakaf, for funding development of land wakaf, you save on the land cost, yeah, but it's a little bit more restricted in what you can do because it's dependent on the nature, location, and everything related to the land asset, right? So wakaf crowdfunding, I think, is great. It's something that should be done. Ethis has been looking at it. We do have charity wakaf, pure wakaf crowdfunding on globalsedekah.com. You can check it out. And there you can contribute to wakaf projects. We have had projects to build wells in certain parts of Africa. We've had projects or campaigns to build mosques in Indonesia, to put solar panels, and so on. So you can check it out over there. Right. Let me move on. How does the property developer share the risks and the profits with the investors? All right. So here we are jumping back to the core investment opportunity that we have, which is property development for social housing or low cost housing in Indonesia. And the question is from the property side, from the developer side, what are their risks? Okay. Now, first of all, let me give you an understanding of the entire project. All right. So typically, a project will have many units, right? And is built in either low-rise building, 3 or 4 stories in urban areas, or more commonly, single-story, large land area in outskirts of cities, especially in industrial areas and agriculture areas, right? So what happens in a standard project, let's say, easy numbers, there's 1,000 houses to be developed in a big project, and each house is to be sold at about $10,000, right? Just giving you easy numbers, which are quite accurate, and so it's a $10 million project, right? That's the value of the project. Now, what the developer needs before Ethis comes in, aside from their track record and their calculations and all the different project data, what we need in terms of the development of the project is typically the developer has already bought the land, has already owned the land or has rights to the land, and he is processing permits or has gotten permits, and then we come in for construction, right? So once they already have the land and the permits and they start building houses, then the crowd comes in to build more houses faster, right? That is one type of project. Now, these projects are typically shorter term because construction does not take too long. So usually it's about a year, right? Sometimes even shorter. So what happens is the developer, in this case, the developer would have put $2 or $3 million into the land. Sometimes they pay over a period of time. And then, so they've put in about 20-30% of the project's capital required. And then they start constructing. And what they do is they build batches of houses, and for every batch that's completed, it will be sold to the end buyer, and then the financing is obtained from the bank, and that is where the developer gets revenue. And from the revenue, they start to build more and more houses. Right? So they build 10, 20 houses, they sell it, they get the money, they build another 10, 20 houses. It depends on the developer, right? That's how they manage the business. So then we come in with the crowd to fund an additional 20, 50, or 100 houses so that more houses can be built faster. That's the first time. Now, in this case, the developer has already taken the risk at the start, and our capital is usually 5 or 10% of the project, and the developer has to give you your returns, and he has to pay Ethis our fees. So then he shares in that, in the profit of that batch of units that we invest in. So his risk in the project is still full and complete from end to end. He has to take up the risk in terms of his own capital and in terms of the performance and the speed of the project, right? Now, there's another type of project where the crowd comes in earlier. If you go online, there's the Daru, the Essential Daru by Individual Properties. Now, this is a little bit more premium. And when I say premium, it doesn't mean expensive. It means affordable. Yeah, so the units are slightly above the subsidized range, and they are better quality, and it's for a group of it's lower middle income people who are very stable, and similarly also they don't have enough homes. Now, for the Daru specifically, it has a lot of interested investors. It has a captive, sorry, not investors, buyers. It has a captive market of buyers, and it's already sold a lot of a lot of units. And so, in this case, that when the developer approached us to come in at the early stage, based on our analysis, it's an attractive project, and so we offered it to the crowd. And now, the first phase has been funded by the crowd last year. Now the second phase is ongoing. The project is moving very, very nicely. This is more of an iconic project, a special project. And so there's a good margin and there's much lower risk because of the strength of the project owner. Yeah. So in this case, the crowd and the developer take the risk together at the beginning, and the developer puts in the initial batch of money or amount of money required for the land, and the crowd puts in another amount of money for a later payment for the land and for the permits, right? So essentially, for all projects, there's an element of risk sharing and profit sharing. For the first one, for the first istisna that I shared just now, where we fund the construction of units, technically we are buying units that are not finished, and then we are selling it to the end buyers, and that's where we get our margin. In the second scenario, we are joining the project. The investors, all of you, are part of the project as a joint venture or a partner, and you invest from the very initial stage. And that's why these kind of projects take a year and a half, 2 years, sometimes 2 years plus. Question 8, how can crowdfunding help in sustainable development? All right, it's an interesting question. Now, there's many ways to answer this, and maybe I will not go too deep into it. But I'll probably have 2 ways. So one is more of a deeper or wider, more fundamental look at how the financial system today works. If you do some of your reading and research, you will find that there's a lot of inequality created by a lot of speculative activities, a lot of loans and financing that creates unsustainable debt by the borrowers, whether it is at the individual level using a credit card, or whether it's at the country level, a developing country borrowing money from China or from the US, right? So one problem is how the financial system has become very one-sided, where those with money are exploiting those who need money, right? That is the reality of most of the modern financial system today. So how can crowdfunding help that? Obviously, it's a very big picture kind of scenario. But what crowdfunding can do is crowdfunding provides an alternative, maybe not the size of the kind of funding that China gives to a developing country or the US gives to a developing country, but it can help to activate new funds for the people who would have received part of that loan from the traditional way. Now, instead of their government having to borrow, and then the money trickles down in a way that is not sustainable and doesn't uplift the people, they now have an avenue to directly get money from the crowd. Okay, so I cannot go too deep into this. That's the general idea from a wider perspective, right? But if you zoom in to how we can create sustainability at the micro level, it's very similar, where people today, a lot of small businesses, property developers who, in this case, are trying to build social housing, there are financing gaps in the market, right? There are financing gaps. They're not able to get funds from the typical financiers and lenders, which are the banks and the fund managers, for many, many reasons. So when crowdfunding comes, crowdfunding, especially Islamic crowdfunding, is a very participatory form of finance, because you're sharing, as I shared earlier, in the risk and the reward. And in doing so, you create a fairer environment, a more equitable environment, which leads to sustainability, right? When the project does well, everybody benefits. When the project does not do well, everybody has to take that risk as well. And this is something that makes it sustainable, because what happens is, in the current exploitative traditional financial system, those with money take advantage of those without money. And in the long run, it creates problems both ways, Because if you lend money to, or you finance projects, and then you take advantage of those projects, if things are not going well, then those businesses or those projects are not able to continue, and then you lose that financing client or opportunity, and you have to keep looking for more. And that's why there's inequality, widespread inequality everywhere, right? So crowdfunding definitely, especially if you talk about charity crowdfunding, right? In charity, a lot of money is lost today through middlemen. Crowdfunding as a platform, of course, takes some fees, but the fees are much lower than what's happening outside, and your money goes straight to the charity or the NGO, and that also makes that process more sustainable. And one thing I want to add before I move on to the next question is, because on a platform, there is a need for transparency, and for Ethis, there's a need for updates and reports that create a long-lasting relationship between the project and the investor. And that, I believe, creates a long-term relationship where it is a funding relationship, right? So when a developer has given you back your funds with profits and you're happy, you will definitely want to invest in that developer again. And that leads to a sustainable source of funds for good property developers or good project owners. Right. Question nine, can Ethis collaborate with Islamic microfinance? Right? And can microfinance have a crowdfunding platform? Now, in many parts of the world, or I mean, I would say maybe not many, but there are a handful of such platforms already. Most of them are charity, and increasingly there are a few that do it as an investment. All right. And for Ethis, we have been looking at it. And right now, with our Indonesian license, we have already started talking to microfinance companies. However, from our analysis, the returns will be lower. And it's a very different kind of investment compared to property, where there's no collateral or asset. So we do intend to have microfinance crowdfunding in the future, but it won't come so soon. The soonest it will happen for Ethis would probably be in the second half of this year or at the end of this year, right? Thank you for the question. It's definitely something that we are looking at. And in many countries, the partners that we have spoken to, especially in Indonesia, the default rates are very low. So there is a low risk kind of approach to it, where there's a low chance of losing the funds, but at the same time the returns are also not too high, because of the high cost of administration of microfinance. Yeah. Right, question 10, and I think we have 2 bonus questions, and I'll also try to pick up as many questions as I can from the Q&A. So if you have any questions, please start sending it so that I can respond to it in the next few minutes. What is the easiest way to invest in your platform in Ethis from Europe? Now, it is the same from everywhere. We allow investments from most countries, and essentially you will transfer the funds from your country, from your account, directly or through an online remittance company or even an offline remittance company directly to the project account in Indonesia. And from Europe, typically most European countries, you will be able to use TransferWise if you like, or you can use your bank. Yeah, but take note that any form of transfer, there will be some cost and some losses incurred, which will typically be in the range of 0.5 to 1.5%, depending on your country, depending on your bank, depending on which service you use. Yeah, 0.5 to 1.5%, there will be a loss when you make your transfer. Yep. Okay, 11 and 12. Do you have products for angel investments? Would foreign investors be able to participate, and what's the process? All right, so 3 questions in one. This is not a bonus question. This is 3 questions in one. They are quite related. Angel investments, I assume it's investing more in new ventures, in exciting concepts, in technology startups. We do have a group of investors that invest in startups, and if you have that interest, you can let us know, but it is not available on the platform yet, because these kind of projects are very high risk. So over time, as we develop relationships with our investors, with the crowd, and our team speaks to you, some of you tell us that I prefer and I want to also invest in startups, even though I know they are high risk. And for Ethis, we have a lot of projects coming to us, especially when it comes to Islamic fintech. We are well connected to the scene. And within Ethis, we also have initiatives and new projects and new companies coming up every so often. So we do not have products on the platform per se, but on a private level, we can facilitate and we can match you to technology or new venture investments. Just let us know, although it's not on the platform. And secondly, foreign investors, yes, definitely. We have a lot of foreign investors. In fact, all our investors are foreign. Only now with a license in Indonesia, we are getting investments from locals in Indonesia. And it's not a fund. The question here is, can you participate in the fund? We do not run a fund. What we do is we match you so that you can invest directly to the project. So it's on a project basis. We don't hold on to your money in terms of keeping money in the fund and managing it for you. That's not something our platform does. Right. At the same time, Alhamdulillah, in the past few months, you've had just for your information, and maybe if any of you are in institutions, this may interest you as well. We have had a lot of interest from institutional investors, and so we are working with a fund management company, because some of these institutional investors want to put or place a certain larger amount instead of small amounts in many projects. They want to put a large amount, and then from there the fund or the fund manager will invest in the projects for them, yeah, based on pre-approvals. So that's something we are doing right now, and it should be starting in the next quarter or so. And the last question is the process cost and returns. Yeah, so this is something I briefly mentioned just now. It's very easy in the sense that you go on the platform, you download the information, you read the information, you understand what's happening, or if you don't have time, you just reach out to us. Right? Either way, you just submit your investment interest and our team will get in touch with you. You can straight away do the transfer if you don't have any questions, or you can communicate with us, you can talk with us, you can WhatsApp us, and then we will guide you through the process, right? It's not very difficult. It is actually quite easy. And the main thing that you'll need to do is to do the transfer. Everything else is all online, from the agreements to the communication. It can all be done online and it's automated. The returns for every project is different. Typically over a 1 year, projected 1 year project, it's about 12% up to maybe 14, 15% sometimes. For 2 years, it's about 20 to maybe even 30%. Yeah. And the time frame, as I mentioned earlier, is projected time frame. There are risks of delays in construction projects. And if that happens, then you need to be able to wait. So what we do is we provide monthly updates, or we work with the developers for them to provide monthly updates to you on the platform. And last question, is there history of defaults? All right, this is the bonus question, the very important question. Now, it depends on what you mean by defaults. And on many platforms, they have different ways of showing defaults. Now, for Ethis, I want to divide the projects we've done into two types: the affordable housing projects and other projects. We've done a few other projects which are infrastructure based or which are contractual based, not property development based. All right. So I'll talk about these two one by one because the performance is slightly different. For property development projects, we have not had any clear-cut outright default, in the sense that all the projects are running, or there was one project in particular that was going into default, where the developer did not do his part and he was in breach of terms. And then what needed to happen after various attempts to try and rectify the situation, it led to a point where we had to recover the assets of the project or seize the collaterals that were given to the investors or given to you in that project. And so what happened was a recovery process where the collaterals and the assets were taken over, and now the project is running again, and everything is back and moving again, leading to a potential payout in the next 1 year potentially. Right, so that was our only case of having to recover assets where the project went bad in affordable housing. All right, so I repeat, there was one almost default, and in that situation, same as all property development projects that we have, the assets will need to be recovered, and then the project either continued or the project is liquidated based on the assets that we have. Right, and I'm happy to say that in this worst case scenario, that's when an investment thesis or approach is tested. And in this case, it was tested and it's proven that it can work, and it does work, where the asset is still there and the capital of all the investors are intact, and profits will eventually materialize at the end of the project. But of course, there is a significant time lag or delay from the original time frame, and adding on this process, it extends everything by a significant amount of time. In this case, by quite a long time, about a year and a half. Yeah. Now, every other project, I would say, for property development, based on our data, majority are on track, and a portion have delays here and there. And delays, basically, as and when it happens, we will inform you so that you can anticipate that maybe it'll be 1, 2, or 3 months delay. Yeah. So that is the track record for affordable housing. For non-affordable housing, meaning other projects, and we had various other projects in the past. Today, we don't do much of other projects, but in the past, we did have a number of SME projects, funding contractors, and so on, and infrastructure projects. So for these projects, there are less delays, there are more timely payouts, but then there was one clear-cut or outright default where the project owner failed in the project itself, and he paid a portion, I believe about a third of the investor's capital, before that business had to close down. So this is a private project that we did in Malaysia a long time ago, about 3 years ago. Yeah, so it was a construction project, and the the contractor that we funded, that the crowd funded, was not able to receive the full payment due to certain issues in his construction output. And so losses were incurred, and investors also had to share in that loss, right? So I'll summarize: out of 50, there's one that incurred losses, and the rest are ongoing. A number are delayed, one had to be recovered. And overall, I would say it's up to you in your analysis, what you feel about this. And in our opinion, the main thing is you need to spread out your investment. And especially if you're a risk-averse person, you do not want or you cannot afford to lose your returns, and you're okay with medium or high medium returns, then you should go only for or mainly for the property project, and maybe diversify a little bit into other kinds of projects. But if you're looking for more higher returns, shorter term, typically that can be found in the business financing or invoice financing kind of projects that occasionally we have. All right. So this is the last question that is on the slides. So I want to repeat. There is a risk, and you have to be well aware of the risk. And if your focus is on property, then the main risk is the risk of delay. There is a much lower risk of losing your capital. If you are more of the aggressive kind of investor, you're looking more for returns, right? You're not looking for a longer time frame, you want a shorter time frame, then definitely investing in the smaller, shorter deals will make more sense for you. At the end of the day, diversification is always the best approach. All right, so we've come to the end of the questions here. And what we'll do now is we'll take a look at the questions that have come in, and I will respond to the questions.